Welcome everybody to another week of the Bill Weekly Roundup. I'm here with Dave Martin this week. You'll notice conspicuously that Matt Dines is not with us this week. He had better plans than we did, getting to enjoy some warm weather out in Mexico.
Yeah, we're stuck here in frosty Seattle while he's down in Tulum. So I'm guessing we'll try to we'll do our best on updating, timestamping some of the some of the stuff that Matt covers, and then we're going to go a little bit deeper today on some thoughts on DOGE. But Cameron, you want to roll into just some of the standard charts?
Yeah, let's go ahead and do that. So right off the gate, just for everybody, we're going to be talking about DOGE later on in the show. So I think Dave's got quite a bit to talk about there. But to start us off, key charts for the week. First off, you'll notice that we don't have Matt's nice Bloomberg terminal charts. Unfortunately, I also don't have a terminal, but we'll do what we can here. So the first one here is the U.S. dollar index. This is the Dixie. The key trend to think about across the next couple of charts is really tariff uncertainty, right? So if you think about it from that lens, you're seeing originally there's a lot of dollar strength coming through the last couple of months. People really viewed the potential new administration, changes in regulations. They were thinking business friendly. Some of the tariffs, depending on how they're implemented and how other countries are reacting to them, sitting long dollars might actually be a good position. But we are seeing a little bit of a pullback there. I would say, opinion-wise, probably attribute a lot of that to tariff uncertainty, right? Are we going to see China hit us with reciprocal tariffs? You've got a little bit of, if you compare against the euro and other areas like that, Canada as well, you've got a little bit of the tariff uncertainty rolling through as well. So that's the dollar. Similar trend in the 30-year Treasury. So as people are moving out of the dollar, you're seeing more and more long tail of the Treasury curve yields coming up. So Scott Bessent actually today had a meeting, earlier this week had a meeting with the Fed president, and I thought he had an interesting quote coming out of that. So he comments on how the previous administration focused on the shorter end of the yield curve, really pushing on buying those treasuries, pushing those yields down. He's hoping to actually push that duration further out on the yield curve. However, it's really tough to do that when you have multiple big sellers in that market, right? So if you're thinking about if you're in his shoes, you want to try to see either the Fed maybe ease up on some of that quantitative tightening, or find a way to project maybe where you want the market to move towards, so that you can get that favorable lineup of yields. So this is his comment here. Again, path dependency. I think this is no different than what almost every Fed president over the last couple of days have been saying as well. It's definitely a wait and see type situation. But I was surprised that compared to Trump, Bessent has been very vocal about not saying anything publicly about what he talks about with the Fed. So I think that's a little bit of a different way of handling that relationship between himself and Trump.
I think, Cameron, before we move on too, I think it's worth a lot is being there's a lot of noise politically this week, and I don't think we're going to go deep on it this week, and we can follow up next week. But to timestamp it, you've got big alleged updates on the talks over the Ukraine situation. You even had Macron earlier today saying that he thinks that he knows Trump well, and that he's intentionally causing chaos. Again, these are his words. He's intentionally doing this to try to get a deal done and create uncertainty. Maybe chaos is not the right word, but create uncertainty to get a deal done. So I think it's important to look at this stuff on like longer time horizons, because right now I even feel like I'm just whipsawing with a lot of the news. So just want to timestamp that we're in the middle of quite a bit of maybe political chaos and uncertainty right now. It'll be interesting to get once Matt is rested and relaxed from his vacation. It'll be great to get his thoughts on that aspect.
Yep, agreed. And then moving on, so just to follow up from last week, Matt pointed out that the first 6-week Treasury auction, or bill auction, was going to be happening, and that was going to move the bill into a regular piece of the Treasury's auctions. And so just, again, timestamping, showing here that this is the first auction of that new set of 6-week T-bills. So you can see here the total amount tendered versus accepted. So again, a little bit light there, but I think this is a new bill, a different spot on the curve. So we'll see where kind of the market ends up in terms of buying that bill over time. Right now, the high rate, 4.27, investment rate, 4.35. That's about in line with everything else that we've seen along that curve too. So no major surprises there, I don't think. All right, and then again, like I said at the beginning, tariff uncertainty is definitely a key trend here. So when you look at this gold chart, you're just seeing the continued movement of investors deciding that they want to actually hold gold. Maybe you have concerns about your currency or FX or something like that, whatever you might be doing, but ultimately it's investors coming back to the safe haven style assets. So when it comes to gold, today as well, another large run up in gold valuation. So just continuation of that trend.
I think Cameron, Matt's feedback last week was we might sit at this level for a while. It's not necessarily a sure thing that this thing tears through 3,000. I know Matt tends to watch month-end all-time high closes, so I don't know if it's crested. I don't think it's crested 3,000 USD even intraday yet. But yeah, it'll be interesting. It'll be interesting to see, weekend, month-end close, and if it does sit here for a while whatever's going to happen geopolitically starts to shake itself out. So we'll see.
Yeah, and you brought up a good point before we got on the call, talking about how there's still gold flowing from London into the U.S. and so into New York. So I think it's just further proof that it's following that trend of concern about where your actual underlying holdings are sitting, right? So if you're worried about these tariffs, again, you want to get that into the U.S. Ahead of time. Whether or not those end up going through, or they go through at a rate that maybe is too high for your investors, we'll see. But as of today, people are trying to get ahead of that.
Yep.
And then over to Bitcoin. So similar story here. There's a little bit of crab walking, let's call it, in the last couple of months. But ultimately, you are seeing investors still holding on to Bitcoin. It is still across the long term rising in valuation. And in the last couple of days, we've seen same thing, that price tick up a little bit. There's a few other factors that probably go into that, and I'll let Dave talk a little bit about the volatility of this, but ultimately no major changes, no new catalysts on the Bitcoin front, just time stamping again where we're at in the cycle.
Yeah, I want to pause on this because we were talking about this earlier. This is a monthly chart, mm-hmm. And it's very clear looking at it by month that you have these over the last year and a month, maybe a year and 2 months, 14, 15 months, you've got these major jumps on what I interpret, again, this is my opinion, not everyone's, but what I interpret as kind of news-based jumps. You had in late 2023 the clarity and launch of the spot ETFs, and you had this just step change in the price level. And then it confused a lot of people because you hit an all-time high, which I think was the first subsidy epic for Bitcoin, where it reattained an all-time high before the halving. I'll check on that. I'm pretty sure that's true. Um, it's a short history. I mean, 15 years, 16 years is a long time. It feels like a long time. It's still a relatively short history in the grand scheme of things. But then, yeah, you mentioned crab walking. It walked sideways. Maybe it didn't feel sideways to a lot of people who had just got in at that exciting point with the ETFs, but it walked sideways for a good chunk of the year. Trading in range between 50 and 70K, and then on election night, when you had this it was an interesting election because we were so used to the idea of oh man, this is going to drag out. We're not going to know who won, and it became pretty clear, mid-evening. We're on the West Coast, so by mid-evening, it became clear what was happening. The price started to go bonkers into the end of the year, and now it's set up again. So you had that November, December price run, and then now we're setting up this kind of sideways pattern again between low 90s and high 100s to just under 110. So it's I don't know if the narrative. I have actually seen chatter where people are thinking like, oh wow, we're going to walk sideways for months on end again, and that's the right view of it. I'll talk about this a little bit more, but locking in on any notion of where the Bitcoin price is going, save for a few technical setups that Matt's pretty good at calling out. The cup and handle setup mid last year. Save for those, you need to be very careful because this thing can still really pop and do things to you that you didn't expect. Let's go to the next slide.
Yeah.
Do you have something to add on that, Cameron?
No, I think that covered that piece off well.
Okay. So related to what I just said, again, like you've got to be really careful because I see a lot of popular narratives. They're tied to the halving epic, this block subsidy epics, right? So every 4 years, the amount of Bitcoins that get minted every 10 minutes gets cut in half, right? So you can chop these things up into epics, and if you plot them out, you think you start to see patterns, right? This chart is log normalized to make it make a little bit more sense, but when you hear things about like, well, this doesn't normally happen before or after the halving, or like this is what you should expect, like you kind of really only have 3 subsidy epic data points to prove that out. So epic 1 is from the Genesis block to through the first roughly 4 years of existence. And I mean, you're talking about a period of time when there was no price at all on this thing. You're talking about a time when someone's transmitting 10,000 coins to buy some pizzas. So you kind of have to almost throw that one out as like your comparison for what's going to happen. So then, okay, great. Now you have the epic 2, 3, and 4 to try to predict what's going to happen in the 5th epic. And narratively speaking, the expectation is, oh, you're going to see a run up into the halving. And then like 12 to 18 months post halving is going to be the big bull run. Everyone's going to FOMO in to try to ride the momentum. The last 2 epics, you've got this sort of altcoin season index that is like, oh well, it's not altcoin season yet, so I know it's not the top. And I mean, these are narratives that you're hearing out being talked about. I guess my word of caution is that you're looking at a pretty small sample size of history, and it feels like when you're looking at it that something like Bitcoin's everywhere and everyone's talking about it. I just caution that we don't necessarily know it's going to follow the same pattern. So if you look at the top line of the chart, it might be a bit of an eye chart there. We're in Epic 5. That's the green line. We're sitting around 100K. And so if you look at the 2 lines below it, or sorry, the 3 lines below it, you've seen this. Oh, nice. You've got a stylus. you could make the assumption like this is the moment right now. If Cameron, if you put the line just on the green, where the end of the green line is right now, like today, you could start making the assumption of like, whoa, in the last epic, we were hitting that first top. There was obviously a pretty famous double top in the last epic before it crashed significantly, and then rallied at the end. So that's what I'm talking about. People are looking at those narratives. But if you go back 2 epics, then to epic 3, then you're still early. Like you're still very early in the cycle, and you didn't hit this peak. So I guess I'll leave it at that. I mean, we may be busting some of these up. You've got new all-time high. You have ETFs maybe pulling a lot of demand forward last year. New all-time high before the halving, and then I say allegedly a friendly U.S. presidential administration. I say allegedly because I think it's pretty clear that Trump is a shitcoiner as well. He seems to believe in Bitcoin now, but he's also he was at the Nashville Bitcoin conference, and he ended it with good luck with your Bitcoin and all the other things you're playing with. So he's one of the guys who's playing with the other things. So I say allegedly friendly. We'll see what happens, but I do want to talk about volatility on the next slide here, because that is something that I think you are seeing. Cameron, if you could advance it. So Bitcoin's daily volatility is declining with every block subsidy epic shift so far. And this is measured in absolute terms, right? So it's a down or it's an up. That that absolute value move. If you want to pull the data yourself, you can do it. Take the day-to-day price and just take the absolute value of the percentage move over the day. That's the underlying data source for this. And you can see that's why I say you can almost throw out that first epic, because you started with like literally no price, so you can't. You have to throw out like at least maybe a year and a half, 2 years of data there. But things like a 25%, or sorry, things like a 30% daily move were almost like a 1 in 100 chance. So this. But you're seeing over time, your average daily move has gone from 1.3% in the first epic down to basically 20 basis points in the last 2 epics. Again, we're small sample size in epic 5, but epic 4 and 5 right now, you're averaging basically less than 20 basis points move per day. So you're far less volatile than you were 8 years ago, 12 years ago, and again, those extreme moves, a 30% daily move is almost, at this point, I'm not saying it's impossible, but and again, you're looking at historical data, but again, reminder, historical data is the only thing you have to look at. You can't predict the future. So 30% plus daily moves one way or the other are almost non-existent. They can happen, but they're very rare. 20% daily moves are increasingly rare. Over the last couple of cycles, 10% moves are still happening, but the number of those is down by half in this cycle so far. Likewise with 5% daily moves. So where does this all go? And I welcome Cameron if you have thoughts on this. But the implications are, to me, there's 2 implications. I need to be careful. I don't want to go into detail about what Bill does because of regulatory and just approvals. But, we are in the lending business into Bitcoin. And I think that when you have a consistently lower daily volatility, I think it becomes more appealing to be in that lending into Bitcoin business. And, with the Nashville conference, we had Howard Lutnick up there saying he was, going to put $2 billion, give Bitcoiners or the Bitcoin ecosystem $2 billion in liquidity to start. We saw that Blockstream last month announced a new asset management division where they are going to put dollar liquidity in the Bitcoin market. There's been other announcements by other firms since then. So I think the implication is that you're seeing more potentially seeing more dollars come into the space because you've got political legitimacy, you maybe are on the path to better regulatory clarity, but people look at the volatility, full stop. If the thing is still moving around wildly on a day-to-day basis, then your risk management, the amount of collateral that you need to secure, that's just way tougher. So I think it's a mistake not to look at volatility and assume that the dollars might come flowing into lending, partially because of that. The other implication of this, and it cuts both ways, that you're looking at the growth chart, and I forgot who was talking about this the other day. I'm stealing this, but I think so far you could say subsidy epic 5 for Bitcoin has been post-halving. It's actually been a pretty muted run, as in a lot of people are looking at those we just talked about looking at the past 3 cycles and saying, wow, by now I would have expected it to be at 150,000 or 200,000, whatever. I know there's rainbow charts, there's stock to flow models that say that it should be. I don't even know what the stock to flow model says right now, Cameron, but I think it's supposed to be at like 700,000, and you're just like that.
Yeah.
Those models, those things get blown out because, well, the volatility is lower right now, and that again, it cuts both ways. If you're not seeing a ton of 5, 10, 20% moves, again, 20% daily moves are pretty much non-existent, 30% non-existent, and even a 10% move is going to happen maybe 70 bips, maybe once a year, maybe.
And to tack onto that, I think any model that is just highly mechanical, especially with that stock to flow model that we've all seen, I think it just, as we see more regulatory scrutiny, there's news items, things like that. These are all catalysts that can change the perception and price and the valuation of Bitcoin over time. And so a lot of those charts in the early days worked very well, in quotes, based off of that historical data, just because there wasn't so much news and kind of eyeballs on the space. But as we start to grow, more and more people are going to be coming in with different narratives. I'm sure there will still be other shitcoins or other related cryptocurrencies, CBDC type things that are launched that make investors question, will Bitcoin still be the thing, right? And obviously the group of us here within Build, we do think that's going to be Bitcoin, but other investors may not feel the same way, or they might not be as convicted in their positions. And so I think that's something to think about too. Just because a model looks or snaps to history very well doesn't necessarily mean that that's a good risk management practice or way to avoid any blow-ups along the way. And then the other thing I wanted to point out here too is when we're talking about the Bitcoin volatility and all of that, I think a lot of the conversation is around the up moves, but we have to be careful about the down moves, and which I guess I'm really just hammering my same point again, which is you can't just look at the overarching 10 years, 15 years, whatever it is. You have to be able to survive those potentially one-day moves and make sure you build a company or build your business around that. So I'll stop there.
Yeah. Awesome. Let's move on to let's talk about DOGE. I don't know if this is their official logo. Cameron, how do I take control of this?
In the Teams window, there should be a take control button towards the top.
I'm going to try. Oh, yeah, I got it. I got you. Okay. I got you. Okay, great. Okay, so last week, Matt talked a little bit about how do we know what's an early sign. Let's back up for a second. What's the purpose of Department of Government Efficiency? What's the stated purpose? It's to cut spending, cut the federal budget, try to get spending in control, get closer to a balanced budget, and shrink the deficit, right? Like that would be your long-term goal. So Matt had he had a signal that there is I can't remember the exact details, but there's a 1-year floating rate note that the Treasury could issue, which would be potentially an early signal that the fiscal situation was whatever DOGE's efforts, weren't actually kind of getting us to a better spot or improving the fiscal situation. So I wanted to talk a little bit about, okay, what is actually realistic with DOGE? So at this point, unless you live under a rock, everyone knows Elon Musk. They know his sort of the overpromise and deliver eventually or underdeliver. So he went on stage and said he wanted to cut $2 trillion out of the federal government, which is basically slashing it by a third. So that is a very aggressive target. I think that's a target that a lot of people are pretty skeptical on. I think even he's probably walking that back by now. But I kind of wanted to talk through like what's the reality? Like what could we actually expect from this? And what are the early operations, or at least a deep dive in the early operations of how they're actually performing this? I'm just going to put myself down as I'm a little skeptical of how much they can do. So Cameron and I were at a CFA event earlier in the week, and there was an economist from a large asset management firm as a keynote presenter, and he gave his economic forecast for 2025 and 26 and partially through 2027. And I think it was notable, Cameron, correct me if I'm wrong, but like it was notable that he did not bring up DOGE during any portion of his forecast. Am I right on that? Yeah. Okay. So it required later on in the evening during the question and answer session, it required that somebody actually brought it up and they asked him they said, hey, you didn't talk about DOGE. Like, isn't that going to have some impact? Like, his narrative was focused on tariffs and rates and inflation, and he didn't seem very concerned about tariffs either. But he completely just didn't mention DOGE. So when he was asked about it, I think his prediction, and Cameron was there, so you can check me on this, that his prediction was that it would be in the tens of billions, so around 25 to 30 billion in what DOGE could actually effectively cut out of the federal budget, which would be it would actually, we'll get to this in a minute, but it would actually be lower than what DOGE is claiming that they've already done so far. So Cameron, that's am I right on that?
Yeah, I think you represented that correctly. He, just to reiterate, he definitely, all of his projections really came back to we'll be fine. Things are about the same as they were in a year or two, yeah. Right? So just give it a year or two, and we'll be back to normal.
Yeah. Okay, so that's and this is this again. I don't know if this was Chatham House rules. I don't want to name names here. I'm not trying to be cagey, but this is a respected economist for a major firm. Basically saying he's not looking at DOGE as a credible threat to shrink the federal budget. So you've got these different scenarios on the slide here. So lower bound, mid-range, upper, and then extreme. So if you go all the way to the right, I mean, you're basically talking about a scenario where you're facing economic and social catastrophe, right? This is like privatizing Social Security and Medicare, eliminating Medicaid, no more Department of Defense, basically gutting the federal government. That's not going to happen. The upper bound is what Elon Musk talked about, it was Elon Musk and Vivek Ramaswamy talked about when first kind of promoting the idea of DOGE. That's going to require means testing for Social Security and Medicare. It's going to require raising retirement age. You're going to cut a ton of money, like a third of the defense budget. We'll talk about that a little bit later. And then you're also going to talk about big cuts to education, energy, just big cuts of things that are politically nuclear. Let's put it that way. So I'll put that one as politically impossible without a major crisis. So like if we hit a major fiscal crisis, yeah, just something really bad, then maybe that one's on the table. But in the current political environment, I don't see how we get there. Then continue to go over to the left side of the slide. You have that mid range. This is now getting into like it's possible, but politically unpopular zone. So entitlement reforms. So that's like raising minimum ages for entitlements. Discretionary cuts in defense, non-defense spending, and then just cutting out tax, mortgage interest rate deductions, which, by the way, that again, good luck trying to pass that. Deducting mortgage interest is one of the bigger tax breaks and one of the primary reasons that stokes real estate purchasing in the first place. And not the only reason, but it's a major driver of that. So I don't know how you can cut that without knock-on effects down the line to the real estate market. So again, that's going to be running into politically unpopular, possible, but I don't know if you get there before midterm elections and the pain is being felt. So I think what we're really talking about here is the lower bound, and the economists we were listening to 2 days ago saying 25 to 30 billion. This year is 50, 200 billion. That seems like the range of if you can look at it two ways. You look at it top down or you look at it bottom up. And I view what DOGE is doing right now as very bottoms up, and we'll go into that in a minute. I mean, they're going in and just like trying to cut like little line item expenses. The people that they're laying off are a lot of them are newly hired employees. They're probationary employees. So they're trying to like bust in the door and get these quick wins. And you saw this mode of operation when Elon Musk bought Twitter, and he kind of famously walked in with the kitchen sink, let that sink in, and he just caused chaos, but in a very like sort of tech corporate way. And I've gone through this stuff before when departments get reorganized, new leader comes in, and we're going to put all this crap aside and only focus on this one thing, and people get pissed off and they quit. Some people get fired that shouldn't have gotten fired. They try to hire them back. You cut out some waste, but then like you flash forward a couple years and you're kind of basically looking at the same thing. Obviously people argue something like X, now formerly Twitter, is a different place maybe politically and the discourse that's on the platform. There's other platforms that have come up, but I mean, I don't think the product it hasn't meaningfully changed in the way people are using it. There have been tech improvements for sure, but it's not meaningfully different in my opinion. So what are we talking about with DOGE? I mean, they're kind of doing the same thing. They're trimming waste. They're getting rid of little things that are easy to do. Maybe unspent COVID funds, reducing contracts. So this is all feasible stuff, but in my view, it's mostly symbolic, and it doesn't change the long-term spending trajectory. And I think that's kind of what we heard on Tuesday.
Yeah. Well, and
this is
really
just
quick too.
Oh, go ahead, Cameron. Sorry.
To point out that a lot of people are looking at the DOGE cuts and a few other spending cuts as a way to reduce or eliminate our interest expense, right? But what's the amount of spending we need to cut in order to get close to that? It's going to be in that mid to upper bound range, right? So I think the last estimate I saw is $1.3 trillion in less spending. So already you're looking at a situation where the goals set out are going to be really tough to hit just from a political perspective, but those cuts are going to have to be massive to get there.
You also have you have a collision of trying to move very, very fast. It's the old Facebook slogan: move fast, break things. Figure it out later, ship it, and figure it out later. The federal government's not a tech company. It's not a builder of apps. it's a network of different agencies that are providing different services, providing entitlements, doing complicated things, obviously military spending. So I think that what's going to happen, personally, it's my opinion, is you could go through these line items. And this is year-to-date spending for the federal government right now. Very difficult to get, to slash Social Security, Medicare, defense, net interest. Obviously, is the goal, right? What you're trying to reduce. These primary sort of non-discretionary programs are very, very politically tough to cut. And so my opinion is I would look for the discretionary cuts, the things that are very uncontroversial at first, and then they're going to try to turn up the gas. They're going to try to raise the heat and go up the ladder and try to cut more and more things once people get used to it, maybe. And that's where I'm skeptical. I'm skeptical personally of their ability to do that. I also think that we can get into this in a second here. So this is interesting that they are DOGE has a website where you can go and actually look at their quote wall of receipts. So they're saying that they've already cut 55 billion, or that they've produced 55 billion in savings so far. So in their mind, after a couple of weeks of operation, they're already delivering on the low end of what I had up earlier. Well, let's dig into that. What does that actually mean? How do you cut things out of the budget? Well, you go agency by agency and you figure out where you have the authority to just tops down, get this stuff done. So the joke of when was the last time that you went through your roster of, you look at your credit card bill and you say, wow, we're still paying for Paramount Plus. I don't watch anything on there. I don't even know why I bought that. It's they had an NFL game on Peacock one time. I think it was Peacock. And you had to subscribe. And I remember literally buying it and then watching the game and then immediately canceling my subscription. So everyone has this. You've got these little things that you signed up for and you probably should cut it. And so there's stuff like that going on with DOGE right now. So, go ahead, Cameron.
No, I was going to ask, when I hear about the subscriptions and things like that, I'd love to hear kind of more about the types of subscriptions and what about you call out Politico and Wall Street Journal. I think the alternative to that is to say, well, maybe they do need to have a subscription to Wall Street Journal to read those articles, or Politico has some type of added value for somebody that works in government.
Sure. Yeah. So the as you get into it, so you can audit all this stuff on the procurement websites, and so what DOGE is doing is that they're posting their receipts, and then they're giving you a link to the procurement website where you can go in and see for yourself. So the point of these is all right, this is a pretty obvious one. It's should the FDA be spending $1 million on subscriptions to Politico? I mean, can you get a gift link? Is this really necessary? I don't think there's a ton of people who are going to argue that that's a controversial cut. So you go in there, you chop it out. Same thing, what you mentioned there with Cameron with the Wall Street Journal. It's maybe they need it, but any business, and we've been through this at Build, anytime you run up against a challenge, a headwind, this is the first thing that goes, right? So this is the easy stuff. And we have a government accountability office, but it's interesting. DOGE is going in and just identifying these easy things to cut out. Okay, so that seems pretty obvious. Maybe not spending $1 million on subscriptions. Okay, so now what else is going on here? Well, it's kind of hard to see. This is a bit of an eye chart here. So I think that there also is there's some political optics at play that's actually masking the reality of what they're actually saving. So maybe Enron's a bad example, and I think that's a loaded example, but they're marking to market savings that I'm not entirely sure were dollars that were ever going to be spent. And let me give you an example for that. So they're putting, in this case, they're putting down, they're cutting and canceling out what I would view as purchase orders, open-ended purchase orders for different management consulting companies for $25 million each in this case. And that's just on this slide. There's 5 or 6 of these that I could find in the wall of receipts on the DOGE website. So in this case, they're saying, okay, this is we're paying a firm in Atlanta. We're going to pay them $25 million to train people at the FDA about DEI. Well, politically, for the people who voted for the Republicans and the Trump agenda, that's music to their ears, because that was the whole thing. All this DEI stuff, we don't like it, and the government's being overrun with it. And so it looks optically great. We're cutting out, add these up, they're cutting out hundreds of millions right there, just wasted. In their opinion, it's this wasted sort of training. But you got to look at what is the actual reality of what's actually being spent. And I'm going to go into this here. There are some line items here that you have to pay attention. So here's another one that is a $20 million video production contract. Again, these are, if you go into it and look at these companies, these are usually small firms. They specialize in one or two things, maybe management training. They do videos. They'll do like corporate training videos, video production. They're typically pretty small firms, and they specialize in winning these government contracts. So this is a real thing. You have to go through all the procurement process. You have all these codes that you actually have to, these reason codes that the federal government's going to assign to, the reason they're going to give you money. So there are hurdles to sort of get into this game. So these are real companies, but the money that they're claiming, I'm skeptical that it's actually going out the door, or it was going to go out the door. So here's an example. This is a video production company. It's a small company. And they're going to do $20 million. So that's what DOGE is claiming is cut. Well, you need to go and look through the history of the firm and what they've actually provided to the U.S. government. In this case, it's zero, at least in these contracts. So you've got DOGE claiming they're saving you $20 million, but they actually haven't billed anything to the federal government yet. So we'll get into the line items that you can look at. So another thing that could be happening is that these procurement orders are being recoded after the election. So if you look at prior to the executive order for this video production company, it's a blanket purchase agreement to create high quality educational agency videos. Okay, so this is the company I'm talking about. They're doing videos. Government's not good at that. They're going to shop it out to an agency. Companies do this all the time. So after the EO, there's another, I don't know what they call it in the system, but there's a procurement update that says, okay, this is a cancel order, and this is to comply, this modification is to comply with the diversity, equity, inclusion, accessibility executive orders. So again, I'm not there, I'm not on the ground, but if I'm trying to get easy political wins, I'm going in and cutting the easiest possible thing, the thing that I didn't even have money queued up to send out the door. And I'm going to cut it, and I'm going to very conveniently tag it as DEI and say, look, you guys voted for us because we, the DEI stuff has gotten out of control. And look, we're cutting, millions and millions of dollars out of the federal government that was earmarked for this stuff. So this is just the PSA of like, you got to actually go in, like, they're saying they're posting their receipts, and I say, okay, go look at the receipts and see what's actually happening here. So let me go back really quickly. I want to show you one thing you can look at. It's a little hard to see on this slide, but there's the action obligation is their term. That's the government's term for current and total. The action obligation is what has actually been done. That's work that has been done and that you actually have a bill for. Like, you've been invoiced for this. So Cameron, I hired you, you did the work, and you sent me an invoice. Legally, I owe you that money. And then there's sort of just all option value. And I've done procurement before. I've actually, over the course of my career, I've been quite a very large cost center inside some pretty major companies. I know how POs work. You oftentimes open up a purchase order in your company for millions of dollars more than you might actually ever actually spend. In a lot of cases with these things that they're cutting out in DOGE, they haven't spent a dollar, but they have the options at some point down the line to potentially spend 25 million. But DOGE is marking all of this up, and they're saying we've saved you this money, and they're tagging it with what they view as a political win. So just this is my way of saying you got to dive deep on this stuff to really understand what's going on. Are these easy wins? Are these expedient wins? Maybe. Okay. So in those cases, cutting out some subscriptions to Politico, Wall Street Journal, canceling contracts that never were really paying all that much to companies that no one's ever heard of under the banner of, hey, we're doing something about this DEI stuff, like probably not going to get a lot of people up in arms. But political will eventually runs into reality, and you're already starting to see it. And I think it's funny. It's not funny, but you're seeing the headlines about national parks are starting to feel the pinch. That there's been thousands of employees who've been terminated. Many or most, I believe, are newer or probationary employees. So these people are just about to graduate to full-time status. There's a one anecdote of the locksmith, I think, at one of the parks, Yosemite, has been fired, and he's the only guy that has the keys to the bathroom. If you get locked in a bathroom or locked out of a bathroom, you're in for a bad time, or you're going in the woods. So these are all, these are early anecdotes. But the reason I say it's kind of interesting is it's still February for most of the national parks. This is not the hot season for the national parks, and they're already kind of claiming that, okay, we're already causing some serious problems here. There's lines at the gates because the gates aren't staffed. Okay, well, so who cares, right? Well, who cares if the national parks have a lot of it. I don't have the exact stat in front of me. We'll get that. But the national parks are actually pretty heavily used every year. And in terms of the federal government, they don't cost that much money. It's kind of a drop in the bucket, $3.57 billion budget. So you can make the argument, yeah, we can cut some of this out. This is not like critical infrastructure for the U.S. The parks aren't going anywhere. It's just, sort of a nice to have. But you're already running up against the populace saying, hey, wait a minute, this is not necessarily a great experience. And you've only cut out a tiny amount of money out of a real world thing. So to land my point, as soon as you start hitting things, as soon as you start hitting the real world where people are interacting with properties and or agents of the federal government to just do anything, be it even just go to a national park, then that's when you're going to start colliding with political will, and you're going to, as they say, F around and find out. And we haven't even gotten into defense yet, right? So let's talk about defense. Well, earlier we're talking about what's our defense budget. Cameron, what did I say earlier? 900 billion?
Yep, just about.
And we said, let's go back. Actually, I'm just going to rewind the tape here. We said...
I want to say 17% of the government's spending.
Yeah, let's say you wanted to try to hit that upper bound. You've got to cut $300 billion out of the defense budget. And, okay, so our new, is the Secretary of Defense, Pete Hegseth, he's getting in front of it. He's saying, yeah, I'm on board. I'm going to cut $50 billion out of our budget. He's getting his people lined up saying, he's basically saying, I want you guys to find this before Elon and DOGE show up, okay? Being a good foot soldier. Read the highlight. That's over the next 5 years, and this is a key point. If you go through history, you're going to see this. By the time this gets to, the congressionally approved budgets start being debated, they'll start talking about cuts But they will say, well, we're going to do it over 10 years. We're going to do it over 5 years. This is not like shutting off it's not like closing buildings. It's not parking an aircraft carrier, in Bremerton or whatever and just shutting down. These are, the negotiations already start to happen. It's like, well, we'll do this, but we're going to do it over a course of years. So this is just another example of your aspirations of what you can cut. The easy stuff is easy. It's non-controversial, but once you start dealing with people in reality, it gets way, way harder. And that's where I'm pretty skeptical. And you're going to spread these things out over years. So going back to the point we were making earlier, does it actually make an impact, on the interest payments? Does it make an impact on the actual fiscal trajectory of the company? I'm personally skeptical without massive political will. So, Cameron, I'll let you chime in here. I know I'm getting to the end of my rant. I know we usually let Matt have his rants, but I got the stick today. So, and by the way, like, I might not be right. This is just kind of my take here. But what I think is happening is DOGE is, I think on the surface, like, it's a good mission. You can't with a straight face say that the federal government is perfectly run, it's not inefficient, and there's no fraud and abuse, and maybe some priorities that are a little out of whack. Like, I think that that's perfectly valid and true. I've worked around government offices and buildings before, and a lot of that stuff, it's like, they're not run like tech companies. They're not run, for context, Cameron and I spent a long time at Amazon in the 2010s, and I mean, that is a big bureaucratic company, but it still runs really fast, and people get hired and people get fired and decisions are made, and you're shipping new products quickly. But even a company that size has its bureaucracy. And the overarching point here is you can get some quick cuts and some wins and maybe make some political headway. You will also eventually cut too deep and you'll start pissing people off, especially when it comes to their entitlements. But the bigger issue too is, and the harder one, is actually changing the culture of something like the federal government. And you think about, go look at every major tech company that you've ever heard of, and they all have the culture deck, like the Reed Hastings Netflix culture deck, Amazon's leadership principles. I don't know what they call it at Google. It's similar stuff. It's the same thing at Microsoft, Amazon. Same thing at Microsoft, Meta. So I don't think you have that ability, and an organization like DOGE doesn't have that kind of ability to go in and say, oh, like, we're actually going to change the culture of the way these different agents, let's not even call it the federal government, the way these different organizations are run. Like, of course, the military has a culture, like the different branches. The Marines have a culture, Navy has a culture, right? But you can't just go in and shift this and say, okay, we're just going to be more efficient now. It's just not how it works. And I think it's a monumental task that will take probably decades to change. So,
yeah.
So go ahead, Cameron.
And I overarching agree with you. I think for me too, until I see any type of congressional kind of consensus on big cuts to entitlements, it just frankly is not going to move the needle when it comes to the thing that investors care about, which is things like net interest expense, things like how is this actually going to shape the economy moving forward. They're just not big enough cuts. I think that what you are seeing though is there's a lot of maybe conversations that are happening now based off of what is being surfaced, right? So you pointed out the video production, so then I think it is a good question to ask government employees, hey, why do we need this, right? And so if you start to your point, change the culture within these departments, within the agencies, then you might see this actually as a positive over time. But yeah, it is not something that I'm eagerly awaiting to see massive cuts to the tune of $1 trillion in the next year, which is something that would actually make a material impact. But I do think that it's interesting that DOGE is coming back around today. I actually, I'm a little bit on the younger side comparatively, but you brought up the point about Clinton actually reducing the federal employee headcount back in the day, and so making that comparison, I think it's interesting that this is coming back around now in a similar but slightly different fashion.
Yeah. Yeah. Yeah, you're referencing the Clinton administration. Actually, they did get to a balanced federal budget. Various reasons for that. We could probably go to a part two next week, but you had a booming tax receipts at the time. They had what they call the NPR, the National Performance Review. It sounds very exciting, but Clinton, if I recall, he assigned Al Gore to do this. And what's interesting is the contrast in approaches where Gore did it sort of the old school bureaucracy way, where it's like, we're going to form a working group, and they created, he spent like 18 months, and they created an 800 page report that they put on President Clinton's desk, and they had a big party, and they say, Clinton said, I've read every page of this, and we're going to implement these these changes. And again, I don't want to come off as this crotchety old cynic. I mean, I do think we need to change things, but again, going back to the concept of like past precedent, this is the last talking point here. It's like we're in a situation where the big things that we need to cut are politically really, really difficult to cut. So my hope would be you can cut some of the smaller things. Not everything that DOGE does is going to be bad. Some of it, they're going to expose some stuff where I think it probably does need to get cut. I think they're also going to cut some things that it's going to be kind of painful, and maybe we want to roll it back and say that's might not be in the best interests to have toilets overflowing in our national parks or aircraft carriers parked. Probably not going to happen. But I'm hopeful. I think maybe a culture shift is also what we need. If you think about getting towards, getting to that mid-range. But Cameron, I don't know if you have any other questions for me on my DOGE rant here. I kind of went on for a while.
Well, I think for the audience here, if you could actually share a little bit about the DOGE website. I know for myself, I'm not super acquainted with it, but you were obviously able to find actual clips and things.
Let me. Sorry, I should have put that up there. It is DOGE. It is, the website is, it's just doge.gov, doge.gov/savings.
Okay, for our viewers here, I'm going to do something crazy and try to actually do this live, so.
You can take back control, yeah.
I hope I don't break things for us.
Yeah, I didn't want to try to like screen share. I thought I was going to nuke the feed.
That might absolutely happen. I think I just.
Oh, I see it. There it is.
Well, hang on a second. We're doing this live.
Yeah, I can see it, Cameron.
There we go.
It's coming up on Teams there. Well, I don't know. I'm not seeing it on.
I got it.
On X. Well, anyway. Oh, there it is. Yeah. So Cameron, click on savings. Savings, yeah, it's on the top. Yeah, and so this is interesting. I encourage people. I mean, look, just dive deep on on what someone says versus what's actually happening. And the wall of receipts, if you zoom down, is where you can find the links. Yeah, so you can. I don't think you can sort and search yet, but. Just pay attention to things like total contract value versus what they're saying. It's like, are they marking this to market? Or are they saying, we were thinking about a blanket purchase order over the next 10 years for $25 million. So
yep.
That's not the same thing as saving $25 million in this budget cycle.
Right.
So, yeah.
Yeah.
Anyway.
So for our viewers, there you go. There's that. Looks like you can also look at some other metrics they're putting together for us as they go through this.
Which by the way, and hopefully my rant was not. I'm not like against cutting government waste. That's not where I'm coming from, and I do like the fact that they have this transparency, and that they're moving really quickly to put it up there. What I'm saying is, like, as a voter, as a citizen, you should audit if you're interested in this stuff, you should go in and just map out what you're hearing in the media and versus what is the actual reality here and where they're going to cut. Because I didn't see any line items for submarines getting cut anytime soon. So
right.
Well, I think, Cameron, I don't know about you, but maybe next week we'll see if we have Matt back. It would be great to get an update from him. Maybe we'll expect an update from him on some of the geopolitical stuff that's happening. I think between now and next Thursday, I'm imagining there's going to be 50 more headlines. We've got a lot going on, and we'll get a little bit more insight into movements in the dollar, more insight into maybe where gold is going to end up in the month, and get more insight into where rates are shaping up over the course of the year. But with that, I think we could probably sign off, right?
Yep, I'm looking forward to that as well. So appreciate everybody for listening in. See you all next week.
Yeah. Thanks, Cameron.